Okay, let's unpack this. Welcome back to the Deep Dive.
Good to be back.
Today, we're jumping right into the latest market summary. We've got the Grok Trade report for today, June 9th, 2025.
Yeah, fresh off the press.
Let's get straight into it. The overall market picture today, according to Grok Trade.
Well, the report described it as a day of modest gains, generally, nothing too dramatic.
Modest, okay. But wasn't there a specific leader mentioned? I thought that was interesting. Small caps stepping up.
Yeah, they definitely stood out. The Russell 2000, the IWM ETF tracks that it climbed, 0.7%.
0.7%. That's quite a bit more than the others.
It really is. It's significantly outpaced the big indices. And that, that often tells you something about risk appetite maybe creeping back in.
Yeah, that's a classic signal we look for, isn't it? Seeing strength in small caps can suggest investors are maybe getting a bit more comfortable moving away from just the mega caps.
Exactly. Willing to take on a bit more perceived risk.
So how did the bigger indices compare then? The S&P, the NASDAQ?
Much more muted. Really highlights that selectivity. So the S&P 500, the SPY, it only edged up 0.1%.
Just 0.1%.
Yeah. And the really interesting part is where that leaves it. It's hovering right below that $600 level.
Ah, $600 on SPY. Yes. We've been talking about that one for the past few days, haven't we?
We certainly have. It's like a ceiling right now, just holding things back.
These kinds of quieter days for the main indices are actually good times to look deeper.
Right, exactly. Good opportunities to look under the hood at individual stocks, see where patterns might be forming.
Which leads us nicely to Apple, AAPL. That was specifically mentioned in the report. What's the story there?
According to the summary, Apple's daily chart is, well, it's in a tight consolidation.
Tight consolidation?
Yeah, it's forming what looks like a symmetrical triangle pattern.
Okay, symmetrical triangle. So for you watching the chart, what does that typically mean? What's the dynamic there between buyers and sellers?
Well, a symmetrical triangle usually points to indecision.
Yeah.
You get these lower highs and higher lows, and the price just squeezes tighter and tighter.
Like it's winding up.
Exactly. Buyers and sellers are kind of evenly matched for their moment. Neither side can force a decisive move. So volatility shrinks, energy builds.
Right, like compressing a spring.
It's still trading below its 200-day moving average.
Wow, okay. That's often seen as, well, potentially a more bearish long-term signal.
It can be, yeah.
So you've got this short-term indecision, the triangle, happening while it's below that significant long-term average.
And that combination is really the key point. It means this triangle, this consolidation, it really could break either direction.
Up or down.
It could break higher, which might negate some of that bearishness from being below the 200-day, or it could break lower, confirming that weaker stance.
So for you watching Apple, the message is, this quiet isn't necessarily calm, it's a setup.
Precisely.
And Grok Trade emphasizes you got to watch for that decisive move, right? A clear break one way or the other, which ties right back to what we always talk about, having a plan for both outcomes in consolidation.
Absolutely. Patience, discipline, knowing your levels. These aren't times to just sit back. They're times to actively watch and be ready. Define those potential entry or exit points based on the break.
Okay, let's zoom out a bit. What about the broader economic stuff, the sentiment drivers today? What did the report highlight there?
The main driver mentioned was this ongoing, optimism around trade talks.
Trade talks again?
Yeah, specifically reports about U.S.-China discussions. That seemed to give sentiment a bit of a boost today.
Interesting how those headlines can still move the needle, even if it's just sentiment.
They really can inject optimism quickly, and it wasn't just vague sentiment, it hit a specific sector. The report noted chip stocks were leading the gains today.
Yeah, the semis.
Yeah.
Makes sense.
Yeah, mentioned this was picked up on X posts too, linking it directly to that U.S.-China trade focus. Really shows how sensitive those global supply chain sectors are.
Absolutely critical for chips. Good example of macro news flowing straight into sector performance. But what didn't happen today was also important, right?
Right. No major economic data releases.
No inflation reports, no jobs numbers. Nothing concrete for the market to chew on from that perspective.
Exactly. So without that hard data, attention naturally shifts to things like, trade talk headlines. The narrative takes over.
Makes sense. And looking forward.
The report notes markets are already kind of looking ahead, pricing in expectations for the next Fed meeting. That's June 17th and 18th.
Okay, the Fed meeting. What's the hope there?
Seems to be hopes for some clarity on potential rate cuts down the line, and that anticipation is feeding this sort of cautious optimism in the background.
Cautious optimism. Yeah, that feels like the right phrase for it. Small caps running, but big indices stalled. Positive trade whispers, but everyone waiting on the Fed.
Yep.
It's a mixed bag.
It really is. A complex interplay, macro, sector news, technicals on the charts, all feeding into the price action.
Okay, let's totally shift gears now. Other assets mentioned in the summary, crypto and precious metals. What was happening in crypto today?
Bitcoin, BTC, had a pretty significant day, actually. Surged 2.8%.
2.8%. That's a decent move for Bitcoin. And didn't the report say it broke out of something we've been tracking?
Yes, it broke out of that bull flaggish pattern. Grok Trade's been highlighting that for the last, couple of trading weeks?
Yeah, the bull flaggish pattern.
Yeah.
Okay, for you listening, if you've been following along, would you know we've watched that setup? A strong move up, then that sideways or downward channel.
The flagpole and the flag, yeah.
And breaking out of that flag is often seen as bullish continuation. So that 2.8% surge today.
Yeah.
That's the pattern potentially playing out.
It looks like it. And this came after it recovered pretty quickly from that sell-off last Thursday. So the report says, follow through is now the key thing to watch. Is this a real breakout or just a quick spike? That's the question for the next few days.
Got it. And Ethereum. ETH.
ETH actually did even better, rallied over 4%.
Wow. Okay. So broad strength there.
Definitely. Seems like a positive day for the major cryptos, with maybe some technical drivers kicking in.
All right, moving over to precious metals then. Gold. GLD.
Gold saw a gain too, up a 0.47% today.
Okay, modest gain for gold. But silver, SLV, that was a different story.
Yeah, silver jumped quite significantly, up 2.14%.
2.14% for silver. That's a strong move. And again, like Bitcoin, this relates back to a pattern we've been discussing.
Exactly. It's continuing to push higher out of that consolidation pattern we kept highlighting around the $30 level. Remember that?
Yes, the $30 zone for silver. We talked about watching for the break from there. That was a key area.
It really was. And the report actually quantifies the move since then. Silver is now up about 11% from that $30 consolidation point since it broke out.
11%, just from that breakout point a few days ago. Wow.
Yeah, it really shows how monitoring those consolidation zones and key levels can pay off. When they break, the moves can be pretty quick.
Definitely underscores that point.
So the report sees it as positive for silver holders, naturally. But same story as Bitcoin, really need to watch for sustained momentum. Does it keep building on this?
Okay, so let's tie all these threads together for you, the listener. We've got small caps leading, SPY bumping against $600, Apple in its triangle, trade talk vibes, Fed anticipation, Bitcoin breaking its flag, silver jumping from $30. Why does all this matter? How does it weave together?
Well, if you put all those pieces together, you see that even on a modest gain day, the market's doing very different things internally.
Right, not monolithic at all.